want to do in today's lesson, I want to go through the trading plan rules for a trend trade. And I want to show you how you're going to practice trend trading with Nexgen Software Services and the T3 Fibs ProTrader. And in our trading plan, obviously we've got a lot of videos of the plan, we've got videos of trades, we've got all of the rules and things that you can go through as far as educational material. What I want to do in this one is I want to go through really the first trade that you guys are going to get to, which is the high probability trend trades. And I wanted to give you a study system that you will be able to use over the weekend, after hours, to go back and study your trades and study in a more simplistic environment. So before we go any further, the objective of what you're going to be doing with our software, the minimum objective, is to be able to guarantee yourself that you're going to be able to recognize the correct trades that are going to generate at least $400 a day for you on average. And when you've gone through the education and you have finished doing everything that you need to do as far as learning the rules and when to trade and when not to trade, you're going to absolutely see the potential to make this much money and a lot more. I'm 100% sure of it. So, the objective for me is to get you to be able to see the way we see it, right? The way everybody who has software that makes money sees it. So that's really what this lesson is going to be about. And we're going to focus up on our trend trade rules. And, the trend trade rules are really simple. The market's trending up, we're going to buy a pullback, and we're going to get to the next area. I mean, that's basically the short version of the rules, or down vice versa. I'm going to make us, I'm going to add this in, but we're never going to look at it again today. Okay? When you do a 14-2 chart, right, which we're not even going to look at today, there are 3 looks that you must have one of these 3 looks to have a high probability trade. You must have the small triggers crossed down or up to do a trade, first of all. And then the small triggers must be below all of the other triggers to go short, or at least inside, or they must be above all of the other triggers, or at least inside, to go long. That is truly the definition of the 14-2 chart helping you out. Now, we're not going to look at the 14-2 chart anymore. We're going to look at the 5-1 chart, and we're going to look at the 5-1 chart only. Now, there are a couple other things. So in the trading plan for trend trades, right, we discussed that the 14-2 triggers must be in the right look, one of these 3 looks. So again, you can study this portion of it, look at those. It's pretty simple. We're not even going to deal with this today. The second part of a trend trade is to make sure that nothing on the larger charts and smaller charts are lowering the probability of your trade winning. And we're not even going to look at this today. I mean, we're really not going to look at much of this at all. So this is going to be an extra thing that you're going to layer, 2 layers, right? 14-2 triggers helping you or nothing hurting you. Those are the other 2 layers that you're going to use in conjunction with what I'm going to teach you today. So we're not even going to look at those again. We're only going to look at some rules for trend trades. So again, when you look at your chart, there's going to be a look on your 14-2 chart, small charts, that will stop you from doing a trade, hitting fibs with divergence. There's going to be a look on your small chart, large chart combination that also, look, it's fibs with divergence, is going to stop you when the large chart triggers are weak. When the large chart is range bound, you're going to not do trend trades, and only when the market is trending, you're going to do trend trades. Again, we're not even going to look at this on a 14-2 chart today. When you have triple divergences on the wrong side of your triggers, you're going to stop doing trend trades on the smaller chart. We're not going to look at that rule today, but today's lesson is going to give you the ability to recognize that rule without even looking at the rule. So I have a real good plan for this. One of the other rules for when to stop a trend trade, that you can study this, but when we have divergence on all of your charts, especially divergence at fibs with pivot stop outs, we're not going to do any more trend trades. And then finally, if you break out of an area and you have a pivot stop out with divergence, we're going to also not do any more trend trades. So again, we've spent 20 years coming up with all the reasons why you're going to lose a trend trade. So again, those are things that you're going to have to study when you can and when you cannot take a trend trade. Now, in this lesson, we're going to go simple. So let me show you what we're going to do in this lesson. And again, I'm going to give you a copy of this so you can have it. I'll copy paste it in the chat room so you guys can see it. But the short version is, let me go through each of these pictures. This was the trend trade rules, from the trading plan, but you don't even need that. Here's what we're going to do in our test, okay? The small triggers must be above or below both of our synthetic triggers to take a trend trade. The background color must be correct. Green for buys, red for sells. We're going to buy support or resistance when the fib to fib oscillator is correct. And here's a visual. I'll put in a little visual for you guys on what this is going to look like. So let me show you the picture here real quick. And again, you're going to see the simplicity of this. If the small triggers, right, this one, is physically below these two synthetic triggers on the 5-1 chart, we're going to sell a pullback to our resistance if the fib to fib oscillator is in the upper 25%. Is everybody okay with that? Small triggers physically on the correct side, below for shorts, above for longs. That's rule number one for us when we're looking at our 5-1 chart. So if you guys are not familiar or comfortable with the rules, let me know and we'll go through them again, but it's really, really easy. The second rule is if the small triggers get in between both synthetic triggers on the 5-1 chart, we're going to wait for the market to reach the further trigger, right? The further away trigger before any new trades are taken. As long as the color is still correct. If the color is wrong, then we're not going to do it. So let me show you the example picture of this. And again, what we're going to end up doing is we're going to be doing visual backtesting. So again, this is a two-pronged scenario here. The original number one rule is the small triggers are physically above both of the other triggers. It's going to be okay to take a long trade. And then the second rule, the one we're just talking about now, is do you see where the small triggers, where this top arrow is, get below the first synthetic trigger? We're not going to do a long trade until the price reaches the other synthetic trigger. Does that make sense? And as long as it's still green, we'll still do a long trade. What that's going to do is it's going to keep you from going in too early, and it's going to use the second trigger line as the springboard for your trade. So only two scenarios in which we're going to do a trend trade. Small triggers physically above all of the others, or small triggers physically below all the others. And then if they get in between, we need to get to the farther away trigger. Is everybody okay with those rules? Very simple, very straightforward rules, right? Because what we're going to do is we're doing visual backtesting on a single chart. And if you don't have simple rules, it's going to become very difficult. So instead of looking at every rule in the trading plan and trying to get everything in your head all at once, I think it's easier if you just go with a very simple approach. Where your trigger is above, we'll do a trend trade if it's green. If your triggers are in between, you got to get to the farther away one. If it's still green, we can take a trade. So that's the rules. Now, there's one more rule that we're going to discuss, And again, I am recording this, so if you miss part of it or any of it, or have to go, obviously you'll be able to go back and watch this. The trade must remain inside of the 14.2 reversal bar marker. So you can maybe one direct hit of it if it's still red, but usually that doesn't happen. So let me show you the example picture of what I'm talking about with this rule. The rule says as long as you're below the 14.2 reversal bar marker, which is this little white hashtag line that keeps coming down, that's the price at which a 14.2 chart makes an up bar. So as long as we're still below that 14.2 and the color is still red, we'll take another short trade. So in this instance, technically the market went down, but because it was green, we're not going to do this in our test today. Yes, Lou, this is a 5-1 chart only. That's all we're going to do today. So again, this is the situation where if it's green, but you still want to go short, this is where you use your market flow, which we're not going to go look at it in today's test. We may look at a couple of them if you want, but the idea is how do you recognize the correct trend trades on your 5-1 chart? And if you can recognize, so again, look, there's going to be 3 rules that we're going to be dealing with. I want you to understand the 3 rules. Small triggers below all the others, we're going to do sell signals on pullbacks. Small triggers above all of the other triggers, we'll do long trades on pullbacks. If the small triggers are in between, we're going to wait for the farther away trigger. If we're still below the 14.2 reversal bar marker and the color is correct, we'll do trades. If we're still below the 14.2 reversal bar marker and the color's wrong, we'll recognize it and we'll talk about it, but we're not going to go switch to the market flow chart. But if there was a market flow signal here, obviously that's another good opportunity for you. So that's the rules. I mean, really, really simple. And again, I copy pasted in a copy of this for you guys in the chat room. So that way you can, I want you guys to do this over the weekend and do the testing over the weekend. So what we can do is we're going to do this. We're going to go back in time. I've got 30 days worth of data. Pick a day after May 15th. And we'll start from that day and we'll work our way forward. I'll let you guys pick it so it's random. Pretty close to the 15th though, so we can have lots of days. What do you guys like? 16th, 17th? Don't pick a weekend day. All right. So we'll just go random back. I'll start it right there, okay? So that was 16th going into the 17th, okay? Fair enough? So here's your 16th you're asking for, the first. I want to go back a little further so we have. So here's where we're going to start, okay? This is midnight on the 16th going into the 17th. Fair enough? And again, I want you guys to think about something for just a minute. We're not going to be doing any of the rules like making sure that our 14.2 triggers are down. Right? We're going to go on the assumption that you're going to incorporate that as part of your trading plan. What we're doing today only is the 5-1 chart. So again, it's very important that you see the 5-1 chart for what it is. Now, we need one more condition, guys. What's the condition that on the 5-1 chart is going to make us stop, right? Because we have to know, if we're not going to use the big charts, then we need to know when to stop on a small chart. So very simple rule, guys, and it really has to do with either fibs, divergence, or pivot stop outs. And Jerry, I did just post those rules right above where you typed in post the rules, so you can copy paste them. So there's 3 things that will stop us from doing a trade. You ready? Fibs, pivot stop outs, or divergence. If you have more than one of those 2 things at the same spot, we're really going to stop doing trend trades. So does everybody understand that? Fibs, divergence, or pivot stop outs. And if you have two of the three, we're really going to stop doing a trend trade. Everybody okay? All right, so let's go forward here. And again, you'll see how simple this is when we go through the charts. You're going to be like, wow, that's easy. So starting off at midnight, what do you see? I'm going to just draw in a square here and we'll help you out. Small triggers physically below all of the others. So we're going to do a trend trade. Yes or no? I'll let you guys just answer the question. And again, think about what the objective is here real quick. And again, just not to, you only have to make 2 20-tick trades in one day to make your $400 a day. And we're not going to talk about counter trend trades and we're tops and bottoms and things of that nature. We're going to just talk about trend trades that are super high probability. So look, let me label it. Small triggers below all the others. Fib to fib oscillator at 75. Pullback to mid bands and fibs. I mean, that's essentially what we're looking for a short trade. Now, let's go forward. And again, look, this is a terminating condition for us on our 5-1 chart. If we have fibs plus divergence and the triggers don't break through it, we're not going short anymore on a short trend trade. Is everybody okay with that? And again, we don't have all of our charts to work with, so we have to work with what we see on the 5-1 chart only. So this right here, you would not do a short trade because you're not expected to win a short trade in this situation because of the fibs and divergence. So watch, let's just roll forward. And again, I want you to think about the process. Look, here is pivot stop out at fibs, correct? So whenever we have pivot stop outs at fibs and divergences, we tend to not have trend trades that win. This was your trend trade. So again, if you opted to take it, it's one thing, but again, when do you not take them? I'm only looking for perfect. I want perfect, perfect, perfect. And when you recognize the perfect ones, all of a sudden, you're going to be able to filter through the non-perfect ones. And, again, it's going to be easy to see some tops and bottom trades. And again, we'll try to point them out. But anyway, look, let's roll forward. Again, you can see once we break, here's the beautiful thing about our software. So let's call this your resistance zone. And almost without question, the criteria for breaking a resistance zone is the trigger lines exceeding the resistance zone. I mean, you see the same thing a lot, especially in a strong trend, because fibs are going to hold and fibs are going to break. So the trigger lines moving forward ahead is going to be the number one marker for you to say, okay, we're trending and it's going to keep going. And again, there's going to be a lot of trend trades that you're going to recognize, like this one, and you may take it, you may not take it. Traditionally, when, again, I'm kind of talking about some of the rules and termination rules, but look, this was the pivot stop out area that you skipped a long, right? A long trade. Eventually that area is going to break, right? It's going to keep messing around. And when it breaks, usually when your pivot stop out area breaks, you can keep going with the trend. Everybody okay with that? And again, the trend is really, really simple. Mid bands and fibs with everything trending up. I mean, that's pretty much the party. So again, because you broke a prior resistance, usually you're going to get one more trend trade in the direction. Anytime you break a support or resistance and the triggers move. So again, let me rephrase that for you. Everybody okay with this rule? And again, it's just a real simple rule, but if the triggers don't break it, then it's going to be another pivot stop out. If the triggers break it, it almost always generates another winner. Everybody okay with that? So we're going to go forward and we're going to talk about the rules. And again, when you start to look back and see, you're going to say, okay, at midnight 30, I had one high probability trade. And then not until 5 hours later did I have another trade that had an opportunity to win. That's a long time in between high probability trend trades, isn't it? All right, let's move forward. And this is a terminating condition. Agreed? Fibs with divergence, no more long trades. If it breaks, then cool, we'll go long again. Now, if the market goes red, so now we have resistance, our small triggers are below. What are we looking for, guys? We're looking to go short if we get a trend trade. So again, pulling back to the right spot, mid bands with the small triggers below, we're going to do one more short trade. And again, some people do assertive short trades. We're not talking about that. I want to talk about easy to see mid bands or fibs, which again, that's the spot. Stop me if you have questions or you don't agree, okay? Just stop me because we'll talk about them because this is a video, but it would be really nice in the video that somebody said, hey, wait a minute, I have a question, and why was that a trade or why was that not a trade? Because if you ask it now, whoever's watching this video later probably has the same question. So if you have one, feel free to ask it and we'll go, we'll stop and address it. So small triggers below, short, hit fibs with divergence, no, no, no. Breakout with the triggers helping us. Yes, we'll do one more. I mean, just right there, that's your daily goal. 20 ticks there, 20 ticks there, you're up $400. It's only 6 in the morning. Now we hit fibs. The market trends down. Everything is below, so we're going to do a short. Agreed? 20 ticks again. The market breaks the fib. The triggers pass the fib. Very important for continuation to the downside. Traditionally, when your triggers break the fib and the fib changes colors, we're going to look for another trend trade short. We didn't quite... Well, there was no mid-band or fib at this spot up here. Look, this is the area that was just in question. Why no short trade right here? I'll make it yellow. There was no pink mid-band or red fib to sell off of, Susan. That's why there was none here. You can see the down condition, but we didn't have a mid-band, pink, or red fib to sell from, or a pivot stop out area. If it had gone just a smidge higher, then yes, we could have gone short. You see that? So thank you for the question. And again, look, we've got the fibs held at the top, no trade here, which is fine. And then one short for 20 ticks. And then this one doesn't technically fit the rules because we don't have the fib to fib oscillator at 75. You see that? There are a couple exceptions where people will still sell if it's within a tick or two of the right spot, even if the oscillator is at 50. It just means it's trending pretty strong. This is where you guys would have, some discretion on where you would get in. Again, it doesn't quite fit the rules, so I'm not going to include it, but visually it's a pretty easy read, isn't it? Small triggers, break the fibs, synthetic triggers, break the fibs. We're going to the next fib traditionally. That's the criteria for you have a fib and then it breaks and then you're going to keep going. Is that pretty clear? I want everything to be very clear and very obvious. Now, when you see this at the bottom, what do you think? Fibs with divergence. No more shorts. See it? So what happens? From fibs with divergence. Obviously, the market went up. So here's the question. Do we want to do a long trade when we came off of exact hit on resistance with no triggers breaking through? Watch. So again, look, this is very simple single chart reading. Not one trigger breaks the fib. Do we want to take a long? So what do you guys think? If not one trigger breaks a fib, is this one high probability or not? We'll find out. We'll go forward. You ready? You got your trade. Now, remember what we talked about, termination condition. Divergence from the same fib ruins the party. Do you see that? No divergence. So one more. And again, this is in a lot of my old videos, but no divergence. So one attempt because it looks perfect. Now we have divergence. So no more party time to the upside for the moment. What's the other clue that divergence at a fib is going to really make the market go down? Look, your other trigger still crossed down and way down here. You see that? Just a visual clue on your 5-1 chart. Now, again, look, this is one of those situations where, again, I'm not going to really go back to the trading plan and everything else, but you can see what we have. Divergence from a fib kills the trend, right? When we get our small triggers between the two, that's our range-bound look, isn't it? Now, you can see an obvious short looks right here, can't you? It doesn't really fit with the plan that we're talking about now because the small triggers are physically in between the two synthetic triggers. So again, this doesn't quite fit with the rules, but I'm never going to get mad at you for selling resistance and mid bands, especially when you come off of resistance with divergence. So this doesn't count for what we're talking about now, but it sure is pretty, isn't it? Again, you're going to see a lot of exception trades that you're going to be able to get away with. Now, look at the bottom. Divergence plus fibs. That means what? No short trades, right? So even though we have a trend trade short look here, we're not going to do it because of the bottom. Agreed? All right. And lo and behold, divergence from a fib, divergence from a fib. You guys are going to really see a pattern here pretty soon that you're going to be like, wow, it's really not that difficult. Can we agree that the small triggers break above all of the other synthetic triggers? So the idea is, should we be taking a long trade somewhere in this zone? If we do, then we need some help. Again, we didn't know what was going to happen, but the rules were true, right? The small triggers got above all the others. The background color was green. We had a mid-band and fib. Again, this was kind of the zone for your long trade. So again, if you're getting in on the way down, you're probably buying 31, 32, 33. It might have gone 6 or 7 ticks against you. Could you have made 20 ticks again? We're still on the same day here, guys. I mean, I want you to really think about something for a second. This is only one day with one chart, and you've already had one short for 20 ticks, one long for 20 ticks. one short for 20 ticks, one long for some ticks, kind of a short that doesn't fit the rules for what we're talking about, but for another 20 ticks. From the edge, 20 ticks. Trend trade, 20 ticks. You're way over a over a $400 goal. It's 10:30. All right. Divergence from fibs. What does that mean for us, guys? No more trend trades, right? Everything's going down in red. Are we going to do a trend trade? Everything's going down in red. Again, this one kind of misses just a little bit. Now, look, here's finally the other situation we were talking about. Everything's going down, but your small triggers are now inside of the first synthetic trigger. Do you see what I'm talking about? So what that means is that we would like to see this other synthetic trigger catch up before we do another short trade. And again, you can kind of see where the shorts are going to come from, but again, when this other synthetic trigger catches up, you're going to be able to get another short trade out of it pretty easily. Or not. Anyway, you get the idea, right? All right, let's roll forward just a little bit. And again, look, this is 12 o'clock. This is traditionally when we stop running the room. Now, if you got in here in time for a couple of trades, you know, could you have met your goals and objectives for the day with just one chart? I think the answer is yes, pretty easily. Sometimes having all of the charts scares you a little bit. And, you know, when you're a new user. And part of the objective when you're looking at your charts is to make $400 first, but to know when the 14.2 chart says absolutely take a trade or when the 14.2 chart says don't take a trade. And when you put these things together, it really becomes quite clear. All right, let's roll forward here. And again, look, we get some, you know, we get down to support and we get some divergence and the triggers are above. So with all of the triggers above, are we going to get a trend trade long? We're going to get one, right? And again, when we get a long trade, divergence is one of those things that kind of ruins our long trade thoughts. And when we get divergence from a lot of areas, that really ruins our long trade thoughts for the moment. So we make it to the next day. And again, look, that's a pretty productive day one. What do you guys think? Before I go any further, do you guys have questions about day one that we just went through? Because this is what I want you to do over the weekend. I want you to go back over your charts with the simple set of rules and say, okay, where were the high probability shorts? Where did the market stop and why? What was happening at pivot stop outs or fibs? What needed to happen in order for that area to break? Triggers going past it, synthetic triggers. What happened after that happened? And, you know, ultimately, where did the market stop at the top? Fibs with divergence. What happened next? Trend trade with everything red. What happened next? Breaking a fib with the triggers passing it up. What happens next? Fibs with divergence. What happens after that? Trend trade 1. Fibs with divergence. What happens after that? And again, you'll start to really see a very simple, very profitable, very, very easy pattern that you'll be able to start trading. All right, let's go to another day. You ready? Again, look, I love this stuff, guys. I could do this all day long. So I'm going to go to midnight here first real quick. So look, let's get to the next day. Here's midnight. You know, and again, we're not trading after 2 or 3 o'clock in the afternoon, so there's no reason. You know, there's a lot of action, but, you know, again, if you want to follow the rules overnight, following the rules late at night is still going to work for you. It's just going to take a lot longer for the trades to materialize. All right, so let's take a look at, we'll spread it out here. Here's midnight, we're going forward. You know, it's obvious to see a trend trade here, but we're not going to count it. And we're not going to count it because we have fibs with divergence. Now, there's a little, you know, again, sometimes when the large chart supports this short trade right here, you can take it, but for our lesson right now, we're not going to do it, okay? Fibs with divergence means a lot to us, so we're not going to play around against it. When it breaks, we'll be happier about it, but, you know, again, this is where the large chart will, the 14-2 chart will determine whether you take this or not. In our lesson, right, you can't see it from one chart. So, you know, if it was a perfect top on the large chart, you're probably going to take this. If it wasn't, you're probably not. So you just have to wait for an area to break. Does that make sense? So again, we can't see that from here. You can see the trend trade shorts, but we'll follow the rules. Okay, going forward. Obviously breaking support, right? And again, I want you to think about something for a second. We're now on the wrong side. Small triggers are physically on the wrong side of our synthetic triggers. That's not the look for us, is it? With this little simple high probability trade thing that we're doing. You know, again, one more thought process for you. Look at that fib support break and look at the triggers. Again, you have to be a little more assertive in a strong trending market, but for our purposes, we're not going to do this thought process to the short side. You can see it, right? And again, I'm not against the short from the mid band in a really strong trending market. You're going to find that that works really well. If you did sell the mid band because it was still red, that's okay, but you can see you're on the wrong side of your triggers. And, you know, this is the same trade, but a different result. And again, what we're trying to do is we're trying to determine, you know, what's the difference between this one and this one? This one works, this one doesn't. There's no difference in the look of the indicators. Maybe there's a little difference. They kind of squished together a little tighter right there. But, you know, and this is also where the 14-2 chart may have a purpose or a reason why you can't do it there. Anyway, it doesn't fit our rules, so we're not going to mess around with it. Now, everything is going up. Do we want to take a trend trade long when everything is going up? Yes, Kurt, the background is plotting according to the 8-2 triggers. So your question was, the background is plotting based upon this rule right here, which is our filter rule for trend trades. If the 8-2 trigger is the, you know, go above the large trigger, the background will plot green, and that's also true on the 5-1 chart. If the small triggers get below the large triggers, the background on the 5-1 chart will plot red. So that is the background color plot. All right, so we bought right here because it fits the rules, agreed? Small triggers up. Above everything, we bought the mid band because that's the only spot. You got to pivot to the upside, and you would have lost, you know, X number of ticks, 5 or 6 ticks. Agreed? I want to make sure everybody agrees to the loss. Small triggers are up, no divergence, buy the mid band since there's no fibs. Pivot up, trail your stop below the pivot, you're going to take a little loser. The large chart probably said don't do this because of a strong trend, but that's okay. Susan, this is the one you were looking for before. A red background and a pivot stop out. Reason to go short. Now you have an area, Susan, with a red background. Unfortunately, your triggers don't quite agree, with what we're doing above or below both. But I did want to point that out to you, Susan, since you had asked the question earlier, why not go short when it's red? And again, because we didn't have an area. So again, if it gets red and you've got an area and the large chart agrees with it, you could probably get away with it. Doesn't fit the rules on what we're looking for at this very moment. But again, extra opportunities, we might as well talk about them while you see them. Pivot stop outs at lines really makes it, in between triggers, trading the edges is a good thing. Anyway. All right, guys, moving forward. Small triggers get below. We didn't really hit support, did we? So the thought process is we're going to take one more short trade. Agreed? I will need to make sure everybody agrees to it first. So, and again, with the divergence, it hurts it. So if you did take one more short trade, it's over very, very quickly. And again, you guys are going to get used to this. What happens ahead of time before your short trade that makes you lose? Was the fact that your small triggers got back above the synthetic triggers the reason you lost? Was the fact that you had divergence and the small triggers get back above the synthetic triggers that were crossed up made you lose? Think about it. Was it perfect really to go short here? I don't think so. And again, this is what happens in the heat of battle. You see red and you see triggers and you see mid bands, and then you lose sight of some of the other indicators. One-to-ones, divergence, synthetic triggers up, small triggers not below all the others. Anyway. Obviously a pivot stop out short. That's your apology if you take it. But all right, moving forward, guys, with trend trades. And you can see there's a lot of opportunities, right? So what are we looking for? You remember when I told you about a fib breakout, but the most important thing is that the synthetic triggers follow along? You guys remember that? So this is what you want to see. A fib breakout and the synthetic triggers coming along. Traditionally, that means you're going to get another one. Everybody okay with that? Same rule we just talked about, but breaking a fib is one thing, but then when the triggers, the synthetic triggers come along for the ride like this, you almost always get one more good short trend trade. Give me a Y in the room if you agree with that trend trade short. Pretty much everything on the planet coming together at the same spot. Okay? Again, look, we have a little divergence. It's not going to hurt us. We're going to break through it. So do we want to do one more trend trade short? And where is it going to come from? We have divergence down below, so it's probably going to go up a little bit higher. And it didn't. It kept going. That's okay. If you did a short right here, expecting one more down to get to here, you lost. But that's okay. You're going to take losers, guys. The idea is, do the triggers look perfect when you take your loss? If they look, your losers are going to look when you trade our software properly. The losing trades are going to look identical to the winning trades. So look at this. This trade right here in the box is the exact same trade here. This one makes 20 plus plus. This one's going to lose 10. You're going to lose, guys. It's okay. Usually when you lose, it means that the trend is going to reverse, and then you're going to get what's called the apology. So would you agree we'll be doing a trend trade long if we get one now with that look? All of the small triggers are above. Now watch. Here's what's about to happen. The small triggers get below the first trigger. What's our rule on this one, guys? What needs to happen first before we can go long with a trend trade? And again, this is visualization tools, right? Because look, new users are going to see 96 and go long. The experienced users are going to see something closer to this down here and then go long. So yes, you can buy the mid band, but you might fade some heat. So 92 maybe to 85 is a better entry zone. Do you see why I said it, guys? It's a really, really good example. I didn't know that was going to happen, but it's in line with the rules. So small triggers below first synthetic. Rules say wait for the second synthetic to be reached. And again, you can see how that works. It really does keep you from buying the mid band, and it really does make you buy down here. And it's really the difference of getting a great entry with very little risk after the pivot and really having a lot more risk. And the result speaks for itself, doesn't it? It goes up and we have divergence. Now look, the background color is red. We can't go long with a red, can we? I mean, we can, but we're not going to in this test scenario. So I want you to look at your trades for the day so far as you go back and you review your trades and what you're going to do. Right, going back to like 4:30. 14-2 chart will determine, obviously, some of these extra ones. A breakout, one trend trade short. You know, this is the same one. If you did both, you won one, lost one on the wrong side. You went long, you got tricked, you lost 6 ticks. Range bound market, pivot stop out, which we're not talking about. This one ended up not being perfect after all of our triggers rolled up. But a pivot stop out also. Look, this pivot stop out, that pivot stop out, we haven't talked about this today, but when you add in those two trades, that's your daily goal right there. So even if you lose 10 ticks and then make 20, you're still going to be okay. Trend trade short that worked, trend trade short that didn't, trend reversal, recognizing that we're going to get a deeper pullback because the small triggers are below the synthetics. Picks up the right entry spot, and then we make another 20 ticks. And then remember what we said about pivot stop outs and areas like that. We want to see the synthetic triggers break above them. So we can finally do one more trend trade, guys. The background color went green. The small triggers went up. We're inside of everything else. Would you agree? One more long trade. All right. Everybody agrees? So you get 20 ticks here. You get 20 ticks here. Now we're going to stop doing long trades for the moment, because we now have a lot of red lines and we have divergence. Look at your synthetic triggers here, guys. Gives away the whole party. We're not going long because of pivot stop outs with divergence at areas. And again, the synthetic triggers break above and you break it again. You know, do you get to do one more? You're probably already long before the color changed. Agreed? Now, once again, pivot stop out, obviously struggling a lot at the top. I want you to watch the top with the pivot stop out. The synthetic triggers don't after the pivot. So look, I'm talking about after the pivot with divergence. The synthetic triggers don't make any new highs, do they? They don't make any new highs at all. They go sideways and then eventually down. Agreed? So no more long trades with a pivot stop out, divergence, synthetic triggers not going up higher. The background color changes. Do we get to go short right here? Technically, it doesn't fit the rules. And the only reason it doesn't fit the rules is because the Fib to Fib oscillator didn't get to 75. Now, how many times are you going to do back testing on your charts and say, if I have two fibs and a mid band at the same spot and my triggers are down, I may do it anyway? Again, this is something where you guys are going to have to get used to what are you looking at and why would you do it. Now, if you didn't, this is where your Fib to Fib oscillator got to 75 for your next trade. And this is where it was again. So again, any of these three I think are very prudent. Now, what do you see down here, guys? It's a stop condition. Pivot stop out with divergence. Agreed? It's pretty much a stop going short. Now, you could make a pretty compelling argument because the small trigger, remember over here, let me rephrase this lesson. Remember over here where we said, bear with me, the small triggers got below, so we're going to make a deeper pullback before we go up again. Remember that? So again, I want you to see the same look. So right here, the small triggers now have gotten above. So not only do we have double divergence, pivot stop out, right? Divergence, pivot stop out. Our small triggers are now on the wrong side. Can we agree to that? They're not below, they're above. So there's no way you're going short right here, hopefully, right? Because this is where the new users get caught up in doing these mid-band trend trades, and it's wrong. Can you see now why it's so wrong? Double divergence, pivot stop out, plus the triggers on the wrong side. We're going higher. And again, the thought process is that we would go up to here. Now, it didn't quite make it up there. Now, remember what our rule was about this green situation, which we're not going to look at today because we don't have time to do all that. But the rule is, and again, this looks almost identical to what you just had. It's not the same, but it looks damn near the same, doesn't it? Look, short, divergence from a 1-to-1, background color turns green, goes down anyway. This is where you use the market flow to help time that last entry. So if it doesn't quite make it and you get a market flow short signal, then you can take it. Doesn't that look exactly like this? It's not the same spot, but it's pretty freaking close. And again, this is where, the market flow will help you. If you get a signal there, perfect, like an arrow or a signal to go short, then you're going to take it. Anyway, we're not doing that in this class today, but you should go back and study that on an 8-range market flow right there. What happened? Did it give a signal? You want me to do it one time just for grins and giggles? All right, I'll do it one time. I'm not going to do it every time, though. I'm going to go back to 520, and we'll find that spot. Here was the spot. Right here. Look at the bar. That is a market flow sell signal. Antenna bar. After that down bar, you can go short and you get the rest of your money. That's how you use the market flow. Right there. When you still want to go short, but you don't have a signal, that's where you end up making all kinds of money with the market flow. Is that helpful for some of you guys looking at how to use the market flow? So the small triggers were above number. So, again, it's a three-prong process. Double divergence, pivot, stop out from 1-to-1s. Small triggers are getting above. Background turns green. And, look, we think it's going to go up here. But if you get the signal, you got to go. Anyway, good stuff, right? All right, let's move forward, guys. Again, this is market flow winner. We're not going to do that today, but, again, look, when you add in the range-bound trades, the pivot stop-out trades, and high probability trend trades, and the market flow extras, making $400 a day is going to be a bad day for you. All right, let's move forward. We broke fibs. And again, look, this doesn't quite fit with the party that we're talking about today because all of our triggers are on the wrong side. So, again, if you went short, I could understand it, but it's, when all the triggers are on the wrong side, you may also use market flow here to, if you don't get a signal because the triggers are on the wrong side, then you're not going to do a trade. Fair enough? So that's a second spot where you might say, I'll use the market flow. Now, background color changes. Again, look, there's not a long here. It's cute, but there's not a long because there's no green mid-band or blue support. So that's not a long. This is a long right here. Agreed? This is the triggers going up, and again, we have some trouble in the way, but this is the look we really want. Green mid-band, blue fibs, triggers above. Give me a long trade there. I'm going to take it all day long. Look at the result. Let me add one more piece of it. If you did go short here, and obviously if you survived, the reason that you get out, if you have divergence, let's just use a hypothetical. If short and color changes and you get divergence, I can't tell you how many times I say this in class. People get short here, and then they hang on for dear life after the color changes and they get divergence. Get out. Even if you take a little loss, it's okay. Look what happens. The apology. Long, and, it's not just 20 ticks here, and that's $500 a contract before it even made a down bar. Well, triggers on the wrong side is small triggers physically getting above both synthetic triggers. So look, small triggers below both synthetic triggers on the 5-1 chart is on the correct side. When this is exact perfect, look right here. Your small triggers get above all of the synthetic triggers. That's the wrong side for shorts. So I appreciate the question. Gamini, you see what I'm talking about? This is small triggers on the wrong side of the synthetic triggers for shorts. So, all right, so let's move forward. And again, guys, look, what do you see? It should be obvious. There's a divergence with a red fib. No more long trades. Agreed? What is it going to take for us to do long trades? Well, that's the overnight session. So look, that's the end of the day. Let's move past midnight, okay? Anybody else have questions? And again, it's not that you can't trade overnight. It's just it's a little sparse. So what I want to do is I want to get past midnight, and then we'll follow rules again. Okay, so here's midnight. And we'll go forward from here, okay? So this is where a lot of people get in trouble again. The small triggers are not above all of the synthetic triggers, correct? The small triggers are physically below or inside of all of the synthetic triggers, and you get a pivot stop out with divergence. That means the market's going to go down, right? So we get two opportunities for shorts with our rules. There's one here, which is right here, and then there's one that's right here. Again, this is the first spot where you'd be going short at the fibs. And then because we had divergence, traditionally the market's going to stop out the last high. So this would have been your second short after the pivot stop out. Can we agree? Small triggers are physically below all of the other triggers, and it's red. And it's red resistance, and everything's okay for a short. So you probably got in, you probably didn't win anything, and then you had to do it again, and then you won. Now, we get down to pivot stop outs down here with divergence. We have to ask ourselves a question. Do we want to go short after a divergence line pivot stop out with more divergence? Because this is the spot where you guys are going to be faced with the decision. What's the answer? Because it's a really sexy looking area for a trend trade short, isn't it? But you have divergence with a pivot stop out. I mean, you know, if you do it, let's go forward. Let's say you're going to do it anyway. I want you to see what happens very quickly when you're in a jeopardy position. Divergence, again, from the same divergence line really kills it. Right, I understand that too, Susan. But I'm just talking about just a single chart read. Divergence, line low plus actual divergence on the 5-1 chart means watch out, right? So let's just say you say, look, I'm going to do it anyway. It's still worth it. So this is the spot where you would do it. Can we agree that literally within 2 ticks, I mean, you guys would be filled right there? So when you go down to the line again and you make another divergence, you're going to get out of that quickly because those are the ones that reverse the other way very fast. And again, we saw this in class yesterday. You see it all the time. Once you get used to what causes it, you're like, oh, it's not a surprise anymore. You don't lose 10 ticks anymore. You might take it and say, I'll take 10 ticks profit and go to break even and see what happens. Does that make sense? All right, let's move forward. Triggers break above all others. Agreed? We didn't get a trade because, look, divergence exactly from resistance. We're not going long anymore. Can we agree to that? I mean, that is pretty much the reason why all things end. Divergence at Fibonacci resistance. So it's 7 a.m. We're working our way forward, and lo and behold, mid bands, red triggers, fib to fib oscillator, and we get a trend trade short. Can we agree that the rules are met for a trend trade short there? So, you know, and you also have to think about this too. We might have sold at the fibs pivot stop out, you know, from the edge. So had you have gone short here, which we're not talking about that trade today, but that realistically could have been good. And then you get a trend trade short right behind it, you know, you really end up with the best of what we do. Again, we're not talking about pivot stop outs at the edges of fibs, but you can see it. It's pretty obvious. All right, trend trade short. No reason to think we're not going to make 20 ticks on that one, right? Again, we break through, so what happens, guys? Do we do another short? Usually the answer is yes. You know, unfortunately, they didn't quite pull back to the right spot, did they? Unfortunately, you know, look, if you don't have a reason to get in, you're not going to be able to get in because it just didn't get to your spot. So by the time it gets up to a spot, look at what your small triggers are doing. They're both on the wrong side. They're above the synthetic triggers. So you have to ask yourself the question, are you going to do one more anyway from the midband? When it's this strong down, you know, you're going to do one more, even on the wrong side, but not more than one probably. So again, let me blow it up here. So the question is, that strong down, look, this is where the rules are met. Everybody agree? First time you got to a midband, fib to fib oscillator, that's about it. And then the evil, but it's not really evil if you believe it, pivot stop out at a fib ends the trend. How many times have I said that today? Pivot stop out, 2 ticks from a fib. I mean, that's pretty much the end of the party for the moment for trend trades. Agreed? Now, it's not that you'll never go down again. It's just, you know, usually that's a terminating condition. And, you know, again, do you want to take a trend trade after you make a pivot stop out at a fib and it changes trend color? This is another one of those situations where the midband's probably not good, but if you make it back to a trigger, it actually enhances the entry area a little bit. Now, we trade up to the evil stop trend trade longs. Divergence at Fibonacci resistance. Have you heard that term once today? No more long trades. Doesn't mean it can't go up. It just means we're not going to do a long. If you have divergence from resistance, divergence from resistance, divergence from resistance, and the color changes down, technically this does not fit our rules again because the small triggers are in between the two synthetics. You've heard this before, right? It's range bound between the two synthetics. Isn't that one of our 14.2 trigger things too? Works on the 5-1 chart or any chart. Now, there are many of our traders who are going to take a trend trade short right there. Again, you know, it's in between, so we have to still give it a, you know, it's not the official trade. Everybody understand that? This is not what we're doing in our lesson, but man, it's hard to ignore, isn't it? You guys tell me your impression. Small triggers in between both. Why not take the trend trade shorts and try to get a little bit extra? Do you guys see the potential for some extra trades today? Anyway, hopefully so. All right, fibs with divergence. You know what happens with there. We're going to stop doing short trades. So, if you can't go short, well, we get divergence and pivot stop out with divergence at fibs. We can't go long anymore. Again, that's, you know, maybe a short trade, but we'll just have to wait until we break out of this area and everything is nice and easy. Divergence at a fib, it's not going to be easy. Now, pivot stop out short in between the two triggers. Don't you guys think that's one of our favorite trades? From the edge with a pivot stop out short. I mean, we love those looks. Again, it's not a perfect trend trade. So let's wait until it is. And again, look, it makes it to the overnight. Obviously, we're going to go to midnight. So Again, look, nice and easy. Midnight, we'll go forward and we will say, what are the rules? We get to a double bottom with divergence at a fib. No more short trades for now. You really can't argue with that one, can you? So they mess around, pivot stop out. Again, it's not really enough for a long trade. I mean, I guess if you tried to do a long trade here, it didn't work. Pivot stop out long from the edge of fibs usually is our better play. All right. Pivot stop out from fibs. We still can't really do a trend trade, but this one is pretty tempting with the background color and the triggers and 3 fibs. What do you think? 3 fibs and the triggers and the smalls above. I mean, I know we came off a resistance, so technically we can't do it, but it sure is pretty. All right. Pivot stop out at the edge of fibs with divergence. Some people would call that a short trade. It is technically, but we won't talk about that one today either because we're doing trend trades. Guys, do you see the benefit of a pivot stop out trade when the market's not trending? I should stop right here and say yes. This is why it is horrifically important that you incorporate pivot stop outs from the edges, because when the market's not trending, you can still make plenty of money. Right? You have to recognize, trend trades aren't going to work. We're in chop, trade from the edges. And then all of a sudden you start making a ton of money. And then when it breaks out, of course, you can always do trades once it breaks an area, right? Fibs and triggers break. We'll do a trend trade short. I mean, by the time we got there, I mean, look, this would have been your short if you were going to do it, which I'm totally cool with, right? Mid-band with it red, because look, you don't know anything other than right there. This is another one of those situations where the market's probably going to go down, but your triggers are again on the wrong side. So again, this is where you really start to worry about it just a little bit. And again, they do the kind of the same thing. They double bottom, and then that's the end of it. Now we'll see what happens. Can you guys see it? Trigger lines, clear breakout of a Fibonacci area. That's a really clear look, right? Fibs, strong triggers, breakout. So we need to find out what's going to happen. What do you think? 3 blue fibs plus the fib to fib oscillator after a very clear breakout that included the synthetic triggers. Almost looks like shooting fish in a barrel, doesn't it? As long as you believe in what you're seeing. Okay, divergence from a fib. No more long trades. Oh, this looks like crude oil news. So obviously, look at that, 10:30 crude oil news. So we'll let crude oil news shake out for 5 minutes. Okay. So look, we got past crude oil news. Now it's shaking out. So now we'll pick it back up again. Okay. Direct hit of a fib, and what happens, guys? Direct hit of a fib. Divergence from a fib, pivot stop out from a fib with it green. I'm more of a fan of a pivot stop out from a fib when it's green than I am, coming off, let's call this a bottom. I'm more of a fan of an attempt at along with that look. It doesn't really fit the criteria because we have divergence there, but let's wait till we clear out here one way or the other. Pivot stop out at the edge of a fib. Divergence from a fib. All right. Now, would you guys agree? Give me a Y or in the room. Breakout with triggers, it's okay to go short now. Everybody says yes, 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 yes. Cool. Well, they didn't give a pullback. They broke out. Unfortunately, this is typical of a crude oil news day. Look at that. They ran all the way down to fibs with divergence, and then that's the end of the party. Unfortunately, you hit fibs and fibs. This is pivot stop out. We need to have another breakout again, unfortunately. So look, same situation. Breakout of the fibs and the pivot stop out with the triggers agreeing. Now we can go short on a pullback. Agreed? Same situation. There's your pullback. There's your short. Unfortunately, with divergence, it doesn't follow through. So that was kind of like a last hurrah that didn't follow through. Can we all agree to that trade? Now, they reversed course very clearly, very easily. They're ripping through everything. Agreed? So we have to watch our triggers and watch where we're at, and we'll see what our trade's going to be. What do you see by the time you get to the midband? Do you see it? The small triggers are in between the two. So if you went long at the midband, or fibs, you're not going to get hurt because you have a pivot, but it's going to go lower. Can you see why? Because the other synthetic triggers are down here. And when you know it's going to go lower, again, you're able to manage or, wait for something lower. By the time it gets to the other triggers, the background color is red, so you're not really going to do any long trades unless you're going to use the market flow in there. All right, so if you're not doing long trades because it's red, can you do short trades? Technically, no, because our small triggers aren't below, so we need to wait. Now we get a breakout of a fib with the triggers. And if we had pulled back enough, we would have taken another short right there. Can you see it? Those synthetic triggers breaking through is the magic. Now, divergence from a fib. We're going higher. Again, we got back to the synthetic triggers in a fib. Is it worth one more short? This is where the 14-2 chart comes in. See the same pattern again, small triggers above the other triggers, and we went all the way back up to the other triggers. It's very, very, very common. Now, pivot stop out at the edge of fibs. We got some triggers to break and then some not to break. If you did a short, it was short-lived. Here's the question. Did we break up enough to warrant long trades? So again, you have to think big picture. From the bottom of fibs with divergence and pivot stop outs. Yeah, look, if you try it, it doesn't last long. And then we get the exact thing that we love to see. All of our synthetic triggers and all of our fibs and all of our pivot stop outs break. Is it really clear to see, or is it just me? It's really clear. Triggers, fibs, everything breaks. We're going lower. All right. Now we get down to fibs with divergence. That means no more short trades. Pivot stop out from the edge of fibs. Some would call that a long trade. Retest of the fibs, and then divergence to fail. Now, let's see what happens. full on breakout to the downside. You guys see it? Fibs change, synthetic triggers get below it. Now we know for sure, almost guaranteed, we're going to keep going lower. See how easy the read is when the synthetic triggers are past it? So we will indeed do another short when the rules become true. And we will get paid if it follows through. Divergence from 1-to-1s and the small triggers get above. Do we want to do one more or not? You tell me. And again, guys, you guys can do this lesson all day long. Trend trade one time to get up to the spot. Again, it kind of fails. Now look, if you bought the mid-band on the way down and you put your stop below the pivot, you lose 4 ticks for not following through. That's okay. You can live with, you make this short, you lose 4 ticks, you can live with that. Now, let's recalibrate. We'll go forward. Clearly breaking below everything, right? What happens when you clearly break below everything? Fib to fib oscillator gets to the spot. What happens? Really strong market, so not a very deep retracement. Now, again, same situation. Divergence in the middle of nowhere, and we have small triggers on the wrong side. How are we going to take advantage of this over here if we don't pass up the 14.2 reversal bar marker? This is where the market flow will either give you a signal or not. More often than not, it will give you a signal if you don't pass up the 14.2 reversal bar marker. I mean, I guess if you sold the mid-band, you'd still make it. But all right. Is everybody okay with this? And again, I think you guys can see very clearly that when you add in high probability trend trades, pivot stop outs with divergence from the edges, and maybe even a couple of exception trades when your triggers are in a range-bound market, you shouldn't have too much difficulty making 20 ticks a couple times. All right, breaking through. That's a pretty big day. Look, on the wrong side, market flow will help you out here too. Same situation, wrong side. Again, that's kind of a big day. Strong, strong, strong trending day, right? I mean, you break 4 or 5 supports, you're going to keep going short more than most likely. Now, what happens? It'll finally change. Again, not a real easy scenario over here, but this was the first time it went up, and then this is the last time it went up. Last time it went up was with the pivot stop out from the 14.2 midband. And started the downtrend again. Now, more pivot stop outs from the edges, and again, it starts to lose its strength to the downside when you get a pivot stop out at the edge. Everything gets above, you get back to the mid-band, and triggers, and fib to fib, you get another long trade. All right, you guys ready to go look at the live market real quick? We'll take a look at the day today, live market, and let's just see if we can apply those same rules. Okay, so I'm going to go back to midnight today. This is today live. And where's my midnight? Okay, this is today live. So, triggers are below everything. We get resistance and a couple of pivot stop outs after divergence. Triggers break below. Synthetic triggers break below fibs. Agreed? And then one more trend trade short. You're probably sleeping. The Europeans got that one. And then more break, more down, divergence. The last trend trade short at 4 o'clock this morning. Again, do you guys agree with these short potentials here? Small triggers below all the synthetics, mid-band and red fib short, break fibs, mid-band and red fib short, break fibs, mid-band and red fib short. So the money was made early. I want you to see the bottom, guys. What does the bottom have? Same thing we say every day. Divergence, no triggers breaking through from a fib, and the market goes up. Now, one trend trade long, maybe, but it's the edge of resistance. And what happens at the edge of resistance with divergence, guys? We already know it's going to be choppy, right? That's the end of longs until further notice. Look at this. Remember the little lesson we just did? Now look how easy it is to recognize a fake break. We'll put a fake breakout. Notice this little fake breakout right here where the synthetic triggers didn't break above there. Now you don't get tricked anymore. So fake breakout. Can you guys see it? None of the synthetic triggers broke above that edge. Pivot stop out from the edge. Anyway, a little choppy here. No synthetic triggers break the edge yet. No synthetic triggers break the low. One time they break above. One time. Agreed? This is the only time that the synthetic triggers broke above. Agreed? So if you took a long trade right there, that would be probably the only one that really counted. I want to get an opinion. Is this true? I want your opinion. Is it true or false based on what we just went through? True? True, true? What happened? All right, it's a little nasty, but it did go up. You took that one, Gamini? Good. As you should have. So that's what happened after it said it was going to break out, and sure enough, it did. Now, look, here's the same thing we just learned in all that lesson. Small triggers on the wrong side. If you took it, you have to really be a little more cautious about it, don't you? Small triggers on the wrong side. It's okay to try, but not okay to hang on forever. Now, edge of fibs. Dead smack edge of fibs. What happens from the edge of fibs? Did anybody take that short? I know you did. Pivot stop out from the edge of fibs. Short. Multiple time frame fibs hold. Dead to rights. Lo and behold, pivot stop out from the edge of fibs. Short. And now we're kind of working our way down. Here, let me get to live. So it is a choppy day. Again, pivot stop outs at the edge of fibs, guys. Those are really, really important in a choppy day. Very, very important to have that in your arsenal. So important to know when to go. Important to know when to quit. Important to know when you're going to get a high probability trend trade and when you're not. The objective, one more time before I close this video out. Make 20 ticks twice a day. That's all you have to do, guys. 20 ticks twice a day, and you can turn $3,000 into $8,000 in profit over the course of 20 trading days. If you do it consistently over and over and over and over, And let's say you trade on simulator for a couple months and you say, okay, I got it. And then you go live. If you lose $1,250, stop. You're not doing something right. You should not lose $1,500. Make sure you're posting in charts in class. Make sure you're getting feedback for what you're doing. Make sure you go back and do some more studying. Then refund your account when you know you're right, and then do it again. So you always keep your losses as small as possible while you're learning. Because once you actually get it and you can be successful, then the rest of this is going to take care of itself. So the demo, starting from demo and the learning the rules and the practice, let me add in one more little piece that I wrote out for you guys. This is how you get better and get better guaranteed. Learn the rules, watch the videos, participate in class, work on your trading plan. Then simulate your rules during the class. Take pictures and submit your trades for feedback. If you're doing the wrong trades and you practice the wrong trade, you're never going to get better. So it's really imperative in the beginning that you post in your charts for feedback to make sure you're doing everything right. Then, look, I just showed you 4 types of trade setups. Pivot stop outs at the edges, high probability trend trades, range-based extra trades, and then market flow trades. You have to commit to which ones are best for you. You may not be able to do all 4 of those. It may just be too much for you. So which ones are best for you? Just number 1 trades, just trades at the edges, or maybe you can even pick up some of the extras. Now, once you write your personal trading plan, you need to practice it every day, submit your pictures for review. Then after the class is over, you need to go and, whether it's in the evening or on the weekend, you need to go back and do study of your charts. You need to do market replay of the day, and you need to go back and you need to trade the day correctly. If you trade the day correctly, then take a picture of it. If you do it wrong, go back and do it again. Do it over and over and over until you do it right. It's imperative that you don't quit trading for the day until you've done it right. It doesn't do you any good to trade wrong, turn off your computer, and come back the next day and hope things are going to get better. It doesn't work. That's insanity. If you do it wrong, you have to go fix it, study it, practice it, write more rules for yourself. Once you've traded correctly, take a picture, post it in your trading plan, and, again, the comparison of what you did wrong versus what you did right, you're going to have to be able to do this in real time with yourself. Repeat this process every day. Trade, post charts, market replay until you're 100% guaranteed that you're going to make money. Once you get that done, then you can fund an account. And then you're going to have a realistic expectation of making money. Not until you get to that spot. You can't make money because you bought software. You can't make money because you said you want to. You're only going to make money when you can execute the rules 100% with the right look, the right rules, the right areas. Everything has to be perfect. If it's not, you're not going to win. So it's very, very important. We've got everything that you need. We've got everything that you want. All you have to do is participate in class. Make sure you're doing the right thing, guys. 14-2 chart has to be correct. Make sure you're not at a terminal spot where the market's going to end. Make sure that the 8-2 chart filter is helping you out with the background color on the 5-1 chart. And make sure that you're at the right spot on your chart in order to do a trade. You put all those things together, you're going to be very, very confident with the software. So again, I appreciate you guys listening to the lesson. And I appreciate you guys really working towards perfecting the trading plan. I do appreciate that.